Welcome to Property Avenue WA. Would you believe this is episode 17? I'm TV, he's Oscar D'Souza, and this is Property Avenue WA. So middle of August, we just said we cannot believe it. We hope you enjoy what we have to offer this week. We've got a friend of ours, Dean Stonehouse, has been a huge follower, but also a mate. We're going to discuss a few things. Basically, if you like, part two of the First Homebuyer sort of chat we've been having over the last week or two. So we'll talk to Dino about a few things and tips that he would suggest with regard to the finance side of things. And basically, we've got a few other little bits and pieces. I had a very interesting story this week with regard to boundaries, and I believe highlights the importance of title insurance. So we'll just touch on that, and hopefully we can get Sandy from title insurance up and running in the next couple of weeks or so, because I think it's really relative in the current market. And we'll obviously, as I said, we'll talk to Dean Stonehouse about a few things finance, but importantly, my Oscar D'Souza. OD, how is the week, mate? Any highlights?
Mate, yeah, busy week. It's really hard to describe because everyone knows about what's going on in Victoria, and Victoria makes up such a large part of the country. And I was watching the channel, or rather the ABC News, just before, and so much of what gets reported on the ABC News is what's happening in the eastern states. We're almost our separate little country over here at the moment, or we're very isolated in comparison to what's happening in the rest of the economy so far as the real estate market's concerned. I'll jump straight into some stats. So this week, or rather,
I'm going to make it special. I was going to introduce OD's stats. Welcome to Oscar D'Souza.
Yeah. Go. A bit late because I already started, but so last week 803 sales through the Perth metropolitan area. 4 weeks ago it was 813. And one of the issues that I've got is that often when I'm listening to any of the news commentators, there's always a bit more to the story which I feel that they just don't really get into. And what I mean by that is they can quote statistics, and the way in which they say things can lead you to believe that things are going up or they're going down. For example, the number of sales. So we had 803 sales in Perth last week. So I could say something like, there's been 803 sales last week, which is actually a drop from 813 sales 4 weeks ago. So things are definitely looking on the slide. I could say something like that, but the context around it is we've got an absolutely booming, buoyant, really high volume real estate market here in Perth at the moment. So the context around 803 sales last week is that the same week last year we had 510 sales. So the normal market's always 500 to 600 sales in that sort of a broad band. But we've had 800 sales, which is well above that. So 800 sales, which is about 30% above that normal point just last week. And we reached as much as, or just over 1,000 sales going back about 6 or 7 weeks ago as well. So we've had an absolute cracker market over here so far as the volume of transactions. Listings, they just keep plummeting in terms of the availability or the supply. So right now there's just over 10,000 listings available throughout the Perth metropolitan area. And this time last year, sorry, I'm just looking for my data. Sorry, this time last year it was a bit over 14,000 listings. So, that's another drop of 30 or 35% in the space of 12 months. So that's what's happening in the sales field. I mean, we're short on listings. Anything that is for sale, the real estate agents are reporting high volumes of people through home opens, and properties are selling, really quickly, and they're not coming onto the market as quickly. So we're moving into a bit of a supply problem, and there's still lots of buyers around as well for a few reasons that we already know. I always touch on the rental market because that's something that I deal in day to day. 831 properties leased in the Perth metropolitan area last week, 881 4 weeks ago as well. So I don't think that really is a reflection that there's a drop-off in the rental market or a drop-off in demand. I actually think that there's just a supply shortage that's happening right in front of us at the moment. The same week last year, there was 1,037 properties leased. So it's a little bit down from where it was this time last year, but in context, it's still a really, really strong market. Probably the greater data to look at there on the rental market side of things is, well, what does the supply look like? And currently there's just around about 3,500 properties available through the Perth metropolitan area for rent. 4 weeks ago, it was almost at 4,000. So that's another 500 properties drop in a really short space of time. And the same week last year with 6,929 properties available. So that's a 50% drop in a 12-month time period. So both the sales market, and the rental market, they're both really, really strong. Supply keeps going down, but there's still a persistent level of demand. And that's the way that it's been for the last 2 to 3 months as well, which is far different than what's going on the East Coast. Very quickly, I'll just touch on some regional stats, because there are a number of regional people that listen into the show. The Geraldton rental market, that absolutely baffles me, because I obviously had a good few years up in Geraldton, and a normal rental market supply up there was always around about 160 to 200 properties. That was the normal market. But then at one point in time, we had a massive oversupply in Geraldton in the rental market, and that went up to 300 properties. And this is Geraldton, by the way, but so you can't compare the volume, I guess, to what happens in Perth, but it went up to 300 properties, and at its greatest level of oversupply, it had about 400 properties in Geraldton where there weren't enough people to fill them. The rents were falling, and no matter what we did, we really battled to fill those rentals. Today, I've just checked on realestate.com for the first time, ever, and in my life that I've seen it, it's at 98 rentals. So if you're looking for a rental property in Geraldton right now, the supply is under 100 properties, and that's throughout the whole of Geraldton. So that for me is it's a really surprising stat that, 100 properties available, or rather 98 available in Geraldton.
That's all that's available.
Everything throughout the whole of Geraldton, and I've never ever seen the supply at that low level. So it's great for investors, it's great for the landlords and all that, and it's going to be tough for the tenants. So as I said, the normal market was always 160 to 200 in that sort of range. The highest oversupply went all the way up to 400, and for the first time ever, I've now seen it under 100 properties. It's sitting at 98. So there's, I'm not saying that Geraldton is going to be going through a boom because there's so much land available there, but from a rental side of things, I've never seen a stronger rental market. Southwest is obviously doing some amazing things, as we all know at the moment, and there was a news story just, I think it was just over the weekend, in that they've got the best sales market on record, the best that they've seen any time in the last 25 years. And the volume of sales that they've got is actually representing 100% increase on what that previous record was. So it is phenomenal what's happening down there. And as we mentioned, TV, before the start of the show, a lot of that seems to be not just because interest rates are low, not just because the values are relatively low, but people are now actually looking at that area for lifestyle, whether they actually move there and live and work there permanently, or whether they're looking at holiday homes. So the land sales, because of the federal and state government grants, has absolutely gone through the roof, to the point that all land subdivisions down there are basically sold out. And that's really good from the seller's point of view in terms of the land, but it's also really good for employment as well, because there's going to be people that need to build homes, and all the trades and everything are going to get involved in that. So it's a really, really good story. And similarly in Albany as well, I've got some stats on Albany, and just in terms.
You have done some homework.
Yeah, I have, and just almost finished, by the way. I'm going to come up for air, but with Albany, it's just amazing. So in June 2019, there was hardly any demand for blocks, vacant land in Albany, and they sold in June 2019. They sold a total of 7 blocks in Albany. June in 2020, they sold 72 blocks. Now, that's not a massive number, but the same period last year, they sold 7, and 12 months on, they sell 72. So, interest rates have stayed low. It's just phenomenal what is happening down in the southwest. And across the board, the WA real estate market, even up north, it's absolutely pumping. So any of those half-finished stories that you might hear on the news that are not reflective of what's happening in WA, make sure you dig a bit deeper, because there's a bit more to the story.
Yeah, and I will introduce Dino in a sec, because I'd like him to be involved in this conversation as well, obviously being in finance. But there was a very interesting stat that was, well, not so much a stat, but an article that was presented with regard to Commonwealth Bank. And again, as we emphasise all the time, hence why we do Property Avenue WA and why we came up with the idea, is to focus on WA, because you can so easily get, unfortunately, what we do is just a little thing that just goes to wherever maybe or may not be listening. But the purpose of the exercise is, we like to think, is giving you accurate information about the focus on WA. And so I've had people ask me, so why aren't you doing something? You haven't doing much on Geraldton. It's not about Geraldton, it's about WA. It's not about Albany, it's about WA. But we're trying to cover and be as broad as we can. But the focus is what we're trying to provide here is a range of topics, but also be a little bit informative about WA as a whole, and particularly in this current market, because a lot of the commentary and a lot of the papers you pick up and you read, go, oh my God, but that is not what is happening in WA, and we're proofs in the pudding, and hence to have OD on board with that information every week is great to be informed. Hey, listen, I reckon it's time we get our little buddy over here has been sitting here waiting patiently. But so today, like last week, we discussed various little tips about first home buyers and what you should and shouldn't do, and perhaps little things that you could get benefit out of. And as we emphasise, getting someone like myself who is able to be available after hours and give you some direction about contracts and things. But importantly, to do that, you need finance. And of course, Dino's a mate of mine from our National Bank days. We actually started a business, finance broking, many years ago when finance broking wasn't what it was. I think we spent more time knocking on the doors of banks and lending institutions, getting them on board. But Dean Stonehouse, who has his own business called Dean Stonehouse Finance, and Dino's background, he actually had a Bank of Queensland. He was the owner-manager of Bank of Queensland office in Applecross at one stage. And then he got involved. He was the finance executive with Securo Finance Group. And then he was went off and did what else did he do? Oh, he was with Suncorp for a while. Where there was an area there he had there for some time, did a lot of things. He was one of two founding staff members that established the Suncorp property finance brand in WA. So got a background with property and the association with finance. So a great person to talk to tonight. And of course, now he's got his own business. At one stage, he'd been to Melbourne, done all sorts of bits and pieces. Was an ex-National Bank boy. I think he even worked at Three Springs. I'll have to ask him that at one stage, I think, with National Bank at one point. But he's got a lot of experience, a lot of knowledge, and he's got a broken wing at the moment. He's not too good. But I think without further ado, Dino, mate, welcome.
Hey guys, how you going? Good to see you.
Yeah, good to have you. Normally we've got to watch all your comments on the screen, but on the chat. But now we can actually talk to you live. So, welcome,
I was going to send something as well, but that's okay.
I think, Dean, normally you'd wave at us with your left arm, wouldn't you?
That's about as high as it goes, buddy.
Yeah.
Hey, I'll start off something really, really lighthearted for you. So this is a special golf ball, and I know golf is quite important to TV in particular. So this golf ball TV this month is 31 years old. And it's 31 years old for a reason. Just really super quick. We'll keep this really lighthearted before we get to the boring stuff. So, Marangaroo Golf Course.
Yes.
August 24th, 1989. So 31 years ago this month.
Yep.
On the 16th hole, 130 metres, par 3, hole in one.
Not you.
Yeah, me.
Oh.
So the reason why I brought that out today, because during the week somebody said to me about golf, and obviously golf's gone for me at the moment, but they're talking about you drive for show and putt for dough.
I don't want to know.
You need to change that. Just drive really well, and you pick up the dough at the same time.
We're here to do a stuff. You're not even funny, you blokes. I feel as I've been set up here. Hey, listen.
I hope you get to join the exclusive club.
Yeah, thanks. Yeah, I'm the only one in the family who hasn't. Hey, listen, getting back to what we're talking about, with OD, what's happening in the property market, and certainly WA, before we get to some of your points, it was interesting that Commonwealth Bank made a point today that they consider values of property still expect them to fall by up to 10%. Yeah. But based on what we're talking about at the moment, you would expect that to be more an Eastern States thing than a WA thing at the moment with what's going on, would you not? Dino?
Hey, sorry, TV, can I just chime in before Dino? Because just before I got here, I caught something on the news, and I thought you were going to tell me what I heard on the news about the Commonwealth Bank, and this is interesting. So Commonwealth Bank, according to you, is saying that they're expecting property values to drop by 10%, or maybe around 10%. What I just heard on the news is that Commonwealth Bank have come out saying that when this bank holiday period stops because of the COVID, in terms of mortgage relief and mortgage holiday, they fully expect that come January they are going to have no choice but to get hard on homeowners, and if they need to repossess, they need to repossess houses. So I think, and that was what just came out on the news just before. And when I think about that statement in conjunction with falling house prices, and then when I throw forced sales in there that might be forced by the banks because people aren't paying their mortgages, are they, does one justify the other almost?
Yeah. Dino?
Yeah, well, firstly, today's paperwork that's come out with the CBA relates to a national presence in general. So they've obviously brought out their end of year results. And I took some of the data out of what TV was talking about. There was 135,000 home loans just for the CBA that are currently in some form of hardship. And they're looking at extending, or have already got approvals to extend that beyond September, as we know. They're mindful, and I do have a little bit inside knowledge because back in April, I was asked to actually contract and assist the Commonwealth Bank to establish a hardship team here in Perth. They only had one in Sydney and Melbourne. So it was a short-term contract to help set it up and help take their customers through the journey. But they do realise at the end of the day, there's some people going to, unfortunately, not come out of COVID-19 pandemic well. They're either going to have a reduction in income, or they've lost their job and they're on job seeker. I think they said 14% of those home loans that are in deferral mode at the moment, that at least one of the borrowers is on job seeker. And unfortunately, some people are going to have to make some hard decisions. And that will be, hey, we need to change our abode. We need to downsize or reduce our size of a mortgage. And it's probably going to create some opportunities for people to buy. I don't mean to say that as a wrong on the wrong way, but it's certainly going to create some opportunities, and it will be a bit of a rotation of stock. But I don't know, like you guys, I'm more from OD's role. Western Australia's come off a really soft base, and it's probably more sector based and more particular areas of Perth or in particular areas of the state that might have some negative impact on prices, but other areas, I would expect that I'm hoping they'll hold okay.
Yeah, I agree with you. I think that the usual inner city areas close to the coast suburbs, the more established areas will do better at holding their own, and the areas of pain will be new subdivisions, outer fringe subdivisions as well. Things like Baldivis, Ellenbrook, those sorts of just outer fringe areas. Not that there's anything wrong with those areas, but those areas have been certainly stimulated by the grants and everything that are in place. If people have got high mortgages out that way and then are subject to losing jobs and everything, historically those are the areas that will show the hurting signs more than the inner city areas.
Yeah. Probably around Baldivis, my concern is, as you know, it's been really soft. There's been a stack of established homes on the market. Some of that's been taken up, but all of a sudden you now got around that area land subdivisions and people going in to build homes. And I'm just hoping that they don't get to look at what could be in 12 or 18 months' time, looking at negative equity. If they find that you could have gone and bought a similar home just down the road, 2 years old, but it's at a price completely different to what it cost them to build. I'm seeing a lot of the builders have taken away the discounting they were doing. Basically, if you want to go buy a block of land, there's the price, where before you had a ability to negotiate. So the discounts have come out, and it's been replaced by the government providing the discount by a grant.
Yeah.
Dino, with regard to what you're doing, and obviously the finance broking, are you getting sort of approached by like your clientele? Are you dealing with a lot of first home buyers? Are they contacting you with regard to what's going on in the current climate?
I am. It's probably from my background and from the area that I worked in was an established area, particularly around Applecross. So you had a lot of the upper end market and the professionals, but at the same time, that introduced first home buyers mainly from the client's children, and also more now. It's a lot more scattered around the city. I am a lot of more first home buyers reaching out, and it's a daunting process because just stepping them through the things that they need to think about, and more so of the different types of costs. If they're entitled to what type of grants, put him into the right contact, put him to the Office of State Revenue, seeing if they're entitled to any sort of savings in other ways to really get them through and hold their hand through the process.
Yep. One of our regulars, Laura Wells. Laura, welcome. She just made a point. What you're talking about, Dino. There's a massive area ready to be developed in River Gums alone, which developers are sitting on releasing 10 blocks at a time. So, there's heaps of that happening. And I was reading, Dino, I think you and I were talking about at one point where, there's clients looking at signing up to buy land, but the land hasn't been released yet. The titles haven't been issued. And that's with the amount of volume of things that are going at the moment. My concern, I suppose, in those circumstances where people are encouraged perhaps to buy, and they're buying on the basis of getting these grants. But if those titles, and there's so many things I know even the Premier is saying, there's lots of land to be released and they're trying to get it through and they're trying to cut red tape. But, you've got a limited time frame for these grants, these home builder grants and whatever they're being offered. If you get caught up with the titles not being issued, and I know from experience, I've done plenty of development work over the journey, and all of a sudden that first home buyer could be in all sorts of bother through no fault of anybody's in particular, but suddenly could fall by the wayside to that grant system. Dino, any comment?
Yeah, spot on. And a recent example we had, that it was a large developer here, south side of the Perth. They brought forward their next stage to lots. They'd only just started earthworks. It was almost a ballot system. One of my clients was interested in buying a block. It got scary for them because all of a sudden they were told that titles was likely to issue around November. It could slip into Christmas, as you know. but it was actually the clauses. What had to highlight was bringing out what's more known as a sunset clause in the sale contract, and the sunset clause was going to tie my client for up to 3 years.
Wow.
So basically, if they didn't deliver and get the titles out, they had no ability to get out, and so they got committed to a block, and it means they could potentially miss out on other opportunities. So and that was buried away in a contract for land sale like this. It was 140 something pages long, and obviously from my background of working in development finance with load subdivisions, it's the first thing I highlighted and said, "Hey, you guys aware of this?" No, and it didn't get raised to them of what could go wrong. But they got some good advice. Got them in contact with yourself, TV, and we chatted away. And at the end of the day, they decided to balk. They actually decided to go, "No, we're going to put this on hold. It's not the right one." And they're now looking for the right property for them that they can achieve their dream.
And look, Property Avenue, we're not here doing this for a hard sell, but as we've emphasised many a time, and OD and I were talking last week, we get guests on because they specialise in their field, and we're more than happy to promote them with regard to what they do. And obviously, we're calling upon our network and people that we know and we trust and have a deal of respect for. But it just highlights the importance, whether it be one of us three or someone else. It's really important that if you're out there and you're listening and you're doing this, or you've got friends that are looking at buying or buying in particular, and if you've got a family member, then look, just it takes nothing to give one of us a call, or someone that you trust and you have faith in, who has an understanding and specialises. So you're just clear on what you're doing, because if you get caught, as I keep saying, you can be really caught out big time. And if there's one tip we can give to first home buyers, or any home buyer for that matter, look, sometimes, and we're not saying that, that anything about the real estate fraternity, anything like that, but it's sometimes important to get that independent person to give an opinion or give you some direction and hold your hand sometimes. So I think it's really important, and certainly in situations like what you're talking about, Dino, it highlights the importance, and we discussed that. We weren't telling people not to, but we're highlighting the what ifs, as I call them.
Yeah, just really quickly on that, I had a phone call from a first home buyer in Sydney on Monday night who's keen to buy Western Australia, gave me some parameters. Obviously, they're in contact with a real estate agent. They were referred to me, and during the conversation, that's one valid point I actually said. I said, "Look, at the end of the day, you've been referred to me, so obviously someone you know and trust believes in me, but more to the point is, when you're going to buy this property, who's your eyes and ears? Who's independent? That's somebody that is in your own camp to make sure that you're happy with this buy, because in 6 months' time, we want to make sure that's exactly what you wanted and you've actually got the right product."
Yep. Mate, well, with regard to the finance side, which is what we've sort of got you on board for, what would you be sort of like, someone comes along, and we say this all the time, whether it be OD with what he does or what I do, and people just sort of think that we just type up a document and that's the end of the story. In your case, for example, with people that wanting to buy or borrow money, particularly first home buyers, what's your thoughts? What's your tips that you would sort of suggest people go if they're going to come to see you, or anybody for that matter, when they're going to borrow money?
Yeah, it's nothing to do with me. It's more to do with them and what their dream is. I like anything, and it's a big purchase, I tell my client, or my proposed client, you need to plan. And the world's changed in regards to finance. Finance has become so much more difficult to get. The process today is slower to get your approval than it was a few years ago.
Very slower. Yeah.
It's a lot slower. I'm back to now saying to my real estate agents, please put 21 days in for finance, and at least give me another 30 days to get to settlement. And for some lenders, they couldn't make that. They wouldn't be able to make that hurdle. But I tell my client to plan and prepare, because it's almost like you're going to be forensically challenged for them to investigate what you've been up to know that you're the right person and you can actually afford it. And in particular, what's in the process of being brought in by the government and through ASIC is what we call BID, is best interest duty. And a best interest duty is to make sure that, one, you get the right product that matches your needs, But more to the point is no one wants to cause you hardship, and no one wants to make you sitting there in 18 months' time, if they can, not to have a for sale sign put up going because somebody overcommitted you.
Yep.
So they're looking at your behaviours, and it's really critical up front to get your finances in order, but more to your cash flow and actually your banking. A couple of things I'd like to just touch on there is putting your savings aside, but actually so people can actually see and evidence where your savings is. There are some banks out there and some lenders who will allow you to vary your deposits in different way, but they're looking to see genuine savings, and they're actually trying to work out, can you actually afford the loan repayment that you're proposing to undertake? You may have been paying rent before, which is going to stop. Have you been saving the gap? What behaviours in your spending patterns will you change to ensure that you can pay your next month's loan repayment? Things that affect, if you're going down the shops and buying items and you start looking at things called Afterpay, Zip Pay. So you're going in, it's like the old lay-by type of situation, except you take the goods home and then you spend the next 2 weeks or 2 months or whatever it happens to be paying it off. People need to understand that puts an inquiry on your credit report. And more credit inquiries changes your scoring, and that could be a whole new program, but it actually makes it harder for you to get finance. So you need to start making sure everything's in order, and so it's ready. And banks will go back 3 months, they'll go back 6 months plus on your, if you've already got existing loans, to look at your account conduct.
With regard to that, so they do those processes. What about the situation, I've had that many a time, where there's a range of grants that are available now, and there was an article that talked about, I saw an article about a young couple in Karratha who they ended up getting they worked out $115,000 basically they ended up with to be able to get started on a home. And they were going to spend some $500,000. So that was the various grants. But of course, there's also this system that's been introduced for a regional land booster program. Have you heard about that?
Yeah. And I'll speak generally. It's probably the best way, because they've got people from various aspects all around Perth and all around WA. From relating to a finance situation, a number of these grants will help you achieve what you need to do, but your lender doesn't take them into consideration when it's doing the loan. An example would be with the current state and federal grants. At the moment, they're controlled by the state government for release, but they're released at the time of the slab goes down. They're released directly to the borrower, to the client. They're not released to the bank. So 2 issues come out of it. Is the bank can't control the funds for the cost to complete in a build. So in other words, you could spend it.
So they're not, okay,
so they won't, I haven't found a bank at the moment. I've not found a lender at the moment. I might be wrong. I've gone through 20 something of them, but there could be one there, and I'll try and find it. Is lenders will exclude those types of government grants from your equity and a cost to complete basis when they calculate your loan repayments. The other issue is, and we were talking about the potential first home buyer a number of minutes ago, where if they take it into consideration and then for some reason they don't meet the parameters, in other words, the builder doesn't build within the 90 days and it falls outside the requirement, you've already committed and obligated your borrower, and they now don't have enough money because the government's not going to pay the grant out.
Well, that's it. Well,
it's a great idea and it's working, but it'll be nice if it's the first home owners grant and paid right up front.
Well, it's interesting because OD and I were talking about, we were talking about this, I think last week, OD, that we were trying to, we picked up an article, I heard a commentary or whatever it may have been, but they were trying to put a proposal together, because I think it's only South Australia and Tasmania where the portal is actually up and running. All the rest of the states, including WA, that may have changed in recent times, but the portal wasn't operating so people could confirm whether they actually qualify or not. But the other thing that they were suggesting is that change the system so before you applied for your loan, or when you apply for your loan, you are able to go into the system to see if you qualify, and that would then be taken into consideration when you're doing your loan application. But at the moment, it's sort of, and like what you're saying, I didn't realise that it goes, did you know, AD, that it going to the client, not to the, so.
Yeah, no, I knew that it was going to the client, but I didn't realise how firm they were as to where they build that into the loan, and or the fact that they take it out, like Dean said. And I think it's really disappointing to hear that that's the case, because it kind of goes back to that old thing where the banks come out or the grant people come out, and these grants where it's meant to put you in front. And I think in reality, or to me as a consumer, whether it's a bank loan where the banks are saying they've got money to lend, or the government's going to be issuing all these grants, if you had the money in the first place sitting there, you probably wouldn't need them, and it's the reason why these grants or these loans are so good is because if you don't have the money and it provides you a bit of a head start, but the actual outcome is, well, hang on, if you haven't got the money to start with, well, they're kind of not going to give it to you down the track anyway. So they've got these loans and these grants available for people that almost don't need it at the start, and for the ones that really do need it, they make it very difficult, or sometimes they take them out of the game because of the conditions on the grants or on the loans.
Yeah.
Pretty frustrating.
Yeah. At the end of the day, most lenders are going to ask you to have at least 5% genuine savings as your initial deposit, and they'll structure your borrowing around that, because their goal is they want to make sure that you've got enough funds to build the property. The grants are, long as it's coming back, it means you might be able to buy some furniture, or you can do some extra work, or do some things around the outside, or finish it off that wasn't part of the build contract. Obviously, that could impact on value, AD, as you probably realise, because you might be missing some things or some basics. But it still helps. But at the end of the day, it hasn't driven the first home buyer who's to be able to walk in the door and go, well, I've saved nothing, but all of a sudden I've now got $60,000 or $70,000 worth of grants, and I've got a 10 or 15% deposit.
Yeah, no, it's really, like, I think no matter what, they have to be able to demonstrate that they can service the loan and all that. But if you could demonstrate that, but you don't have the big sum of money that you need to get started, if that was made available to you, like you said, on day one, that would be a whole lot more helpful, so long as you've demonstrated your ability to repay the loan.
Yeah, they'd probably make 6,000 mortgage brokers around Australia pretty happy, because I'm part of a finance and coffee online group with about 6,000 of them. It's a very hot topic of how can we get this to work, because at the end of the day, all we're trying to do is get the customer over the line so they get what they want.
Yeah. And so, like, when it comes to, TV, grants, or even the whole bank loan thing where the government was going to be supporting bank lending to small business and that sort of stuff, just through this COVID period, and that the government was going to underwrite pretty much 50% of the loans, which reduces the risk of the bank. I made some inquiries myself. I know some other people made some inquiries as well. And as I said before, it seems like the ones that need the money, they've got all these roadblocks in the way for you actually being able to get it. Whereas if you're satisfying the criteria in your bank account, on your balance sheet, on your profit and loss, it almost looks like, well, hang on, you didn't need the money in the first place, but you are the ones that are going to get it because you look like you can pay back the loan. You look like you've got a really good cash flow. So yes, you can borrow the money, but if it gets to that level, do you even need it? So back to my point, it's the ones that really need it where the most roadblocks seem to be.
True.
I'm very sorry about that.
Yeah. Hey, listen, the other thing being, you're talking about the 5% deposit and contribution. One of the other questions that I've had raised, and I've had scenarios over the journey, is where the parents have sort of decided they're going to assist the kids to buy a home, whether it be buy an existing home or help them to build a home, whatever the case would be. So the parents' contribution, and I know I've done this in a roundabout way some years ago with one of our boys, and of course we had to identify the fact that it wasn't a loan. What's the situation with that at the moment with regard to, like, parents decide they're going to help and assist, and it's obviously not savings? where's that puts particular, like say a first home buyer, if they're going to, mum and dad are going to help them to get into their first home?
So TV, just to correct myself, that you provided a cash contribution?
Well, I'll use that as an example. Yeah.
Okay.
So
yeah.
I put around and say, okay, Johnny's going to wants to buy a new house, or he wants to build a new house, and I'm going to give him 50,000 to assist him with his deposit. How does that fare as far as the lender is concerned, and where's that put the client?
Okay, so again, we're talking
application,
because there's hundreds of lenders out there, but majority of lenders will classify that as a gift. And they will ask for that to be verified that it is a gift. So that could be a stat deck. I've seen gifts given by parents that are actually loans, and provided that we can account for it, and it would be included within the servicing calculation to go, well, you owe your parents $50,000, and what's the arrangement, and how much you're paying per month or per week, or how do you pay them back, and they'll take into consideration. So in most cases, you'll still need genuine savings. It's some lenders, if the deposit is greater than like 10%, some are over 20, it doesn't matter, because mortgage insurance for most properties, unless they're specific or they're units or high rise or something different, 20% normally would exclude mortgage insurance. But usually at more than 10% deposit, they are a little bit more flexible.
Yep. Now, the other thing you're talking about deposits, First Home Loan Deposit Scheme, which I wasn't aware about this, but apparently there was 10,000 spots became available in January, and there's now another 10,000 in July 1. What is all that about? And they're saying that allows the borrowers to avoid lending mortgage insurance charges. And you're laughing. I want to know more.
Good luck trying to get one. So yeah, well, I'm laughing because it's like winning lottery. So I have clients who've asked about them, and you inquire about them, you put them together. So in essence, what you're doing is you're rocking up, and there's an allocation of first home buyers can go in and borrow for their first home. And instead of paying mortgage insurance under the certain parameters, the government steps in and guarantees and provides a guarantee to the bank that replaces the mortgage insurance requirement. So there's a whole lot of criteria and program. There's only a select group of lenders. It's not all banks. And so you go through and you do your shopping list and you find which bank it might be. So there's a couple of majors. There's a couple of majors that are not even on the list. There's some regionals. They're the only people who have the allocations. And then it's like camping out for a hot new land release, and all the brokers are shuffling and trying to get into a queue to pick up an allocation that disappears.
Right.
And I've seen emails in the last few days of people and colleagues I know within the broking industry sending emails out to us going, hey, do you know who's still got an allocation left?
Yeah, well,
one of our followers, they're out there, Paul, they're not yet.
Yeah, one of our followers and a friend of Jude's and mine, Betty. Hi, Bet, good to see you. She's just said she understands that scheme's only for properties up to 400,000, which when it comes to buying a property in Perth, it's probably not a lot. It's probably not enough for a lot of that.
It's not just threshold in regards to value. It's also regards to incomes and stuff like that. So it's pretty particular.
Yeah, okay, yeah. So I was interesting because I didn't come across, because then at one point it said the allocation that was released in July 1, they sort of said, oh, there's a few left. There's a few left because some people been reserved, and I'm thinking, how can you be reserved? How did that happen? But obviously that's a carryover from January, is it? Or it must be something like that.
Yeah, or more to the point that people have popped applications in and they've got pre-approvals, or it's subject to something. So. Yeah, I don't know about mates rates or anything like that happening in deals being done. Yes, OD.
TV, quick question if I can, Dino. We've obviously got a really, really hot real estate market in WA at the moment. And back in my day, you need to get all your ducks lined up so that you can have the best opportunity at buying a property that you want in a pretty hot contested market. So obviously you go down a pre-approval route with your mortgage broker or your bank. So these days, because I'm a bit out of touch with it, these days, if you've got that pre-approval letter, can you just go along, make an offer to purchase, strike out the cash thing and go ahead and get the deal? Or is it something that we still need to be really careful of?
Well, I can't give you the legal advice about doing that. That's obviously you understand the risk. To talk about pre-approvals, the quality of a pre-approval is not really what it was. Many lenders now don't do the same level of checks and balances and assessments before that letter issues. It's in many occasions computer generated, so you key the data in, you submit the information to the bank, it flicks through their criteria and goes, yes, the loan to valuation is right, yes, you got equity, yes, you got this, yes, you got this amount of income, and it'll produce your pre-approval. It's almost like a letter of eligibility. I wouldn't hang my hat on it. I've seen things go pear-shaped really bad. The contract of sale has a finance clause in it for a reason, and I can't stress how important it is to be filled in correctly, just like every other part of the document.
But it's also got that other. It's also got that equally sized other side of the finance clause, which is the finance clause not applicable side, which just from the O&As that I see from time to time, there's still quite a few of them coming through, and within that, some people must be educated and satisfied that they're prepared to take on the risk. But I reckon there's a few people in there that have got their computer-generated pre-approval letter that really could be dancing with a bit of fire.
Yeah, spot on. Yeah, some people have played the game and they'll go and cross it out. I'm thinking that they may have a better ability to negotiate if the vendor thinks they are a true cash buyer and exclude the finance clause. I would never recommend anybody to do that. Obviously, they need to know their background really, really strongly. But I've seen risks where the finance clause is filled in and it just says a bank don't disclose or disclose a percentage, and it really isn't finite enough to actually say to somebody, well, if your preferred bank doesn't give this to you for some reason, something comes up that's unknown, you could potentially be forced to start shopping around, and you might end up with a product and a loan that you didn't want in the first place.
And I've seen that. I've seen that with contracts.
TBA, and all the finance clauses. How much you want to borrow? What's your LVR? Who's the bank? TBA, to be advised. I'll tell you later.
Or they write any bank. Yeah.
Sorry, T.
No. I'm with you. And I, even when I do private contracts, it's either cash or it's not cash. And some people say, but we were encouraged to do that because we've got a better chance of getting the property. Yeah, true. You may be. But the fact being is, my favourite saying is, we've got to cater for the what if. You've got to cater for the what if. And if it's not cash and it is finance, whether you're borrowing off your best mate or you're borrowing off a bank or you're borrowing or whatever it may be, then it's subject to finance. And even as a settlement agent, it's really important for us because we've got to then liaise with that lender. And there's no sense in us preparing documents and getting ready to rock and roll as a cash offer when it's not cash, because we've got to get that lending institution to attend settlement. We've got to do, our documentation is different and our processes are different if it doesn't include, if it is a lender or it's not a lender. And there's a whole gambit of reasons just with the process, other than the fact that if you don't get it, and we've had that situation with clients, that what do we do now? I said, unfortunately, it's a cash offer. Oh, but we're always doing finance. But the agent said, well, unfortunately, you're the one who signed that contract and you're the one who said it was a cash offer. And so you suddenly have an unconditional contract. It can be very, very messy and be very, very, you can be in a very untidy position if it's not what it is. And that's why I believe, you need to see a Dean Stonehouse or whoever it may be it your bank manager, be it someone like Dino, to get that before you get to that point. So you're very clear on what's going on and you're getting the right advice. Because in this day and age, as you've already said before, Dino, in my days in the banks, and I've got some clients, some very close friends of mine at the moment, they're going, but we want to do this, we want to do that. And it's not complete residential lending, but at the same time, what it is, I'm saying, yes, I know you've got this and this, but it's all to do with ability to repay. So whether you're buying your first home, your second home, you're buying a farm, whatever, it's all to do with the ability to repay. And that's why you'll go to speak to a Dean Stonehouse, or you'll go and speak to your bank manager, or whoever it may be, to get those things right, because there are the days of doing it because Oscar de Souza is a hell of a nice guy and he knows how to run a business, they don't exist anymore.
Yeah, just really quickly on that, if I may, something that I mentioned to first home buyers in particular, because they're brand new to the market, but even to normal buyers, guys, just remember that in most circumstances, the real estate agent who's selling the property is representing the vendor.
Yep.
They're a salesperson. Their job is to get and maximise the best price for the property, and they're going to look after their vendor. So I'm noticing all of a sudden what's been happening on the East Coast, but I'm now starting to see it in Perth with a buyer's advocate coming up. But again, I was saying, you want a buyer's advocate. If you're going to use one, get one that's well experienced, understands the market, has been around for a while, to see, because all of a sudden then you've got somebody on your own corner helping you bat in. It's just another person within a team potentially to make sure you get the right deal done.
Yeah,
and that's what I do. That's my. The girls now do all the conveyancing side, and my role is really. I'm not the enemy with the real estate fraternity, far from it, but I'm there as an independent person to assist, particularly the buyers, and even to a lesser degree the sellers, but so that I'm giving that independent opinion, obviously with a finance background and a conveyancing background, and being involved in the property market for a very long time. It gives me an understanding. I'm not suggesting I know it all. But it's like what you're saying. It's just that independent direction and an understanding of the process.
True.
The reason why I raised that issue is just because me in the offices that I work with or see or whatever, I probably see the cash offer coming through through on an email or whatever a little bit more commonly than what I probably should. And I mainly think that is because people's awareness isn't what I think it needs to be around that. So I'm not saying don't do it or whatever, but I'm saying make sure you've got the awareness of what you're getting into, and the best way to get that awareness is what we spent quite a bit of time on last week, and that is to make sure that you're talking to some sort of an independent and qualified, experienced advisor. And it doesn't need to be on the screen here. It could be anyone, but qualified, experienced, and independence is really, really important to make sure that you know what it is that you're signing your name against.
Totally agree.
Yep. Hey, Dino, I can't believe how we're rushing through time and we're getting near the end. But just another quick question as far as are you able to just give us, say, 3 or 4 little tips that you would think in summary as far as first home buyers concerned? What are your we're definitely going to have to get you back on board because there's a number of things. I've got a fantastic little thing to put up on the screen about redraw and offset, and I haven't been able to use it. We've run out of time. Would you want to use it quickly?
No, we'll do that another. That's another session by itself. So what I wrote down, I wrote a couple of notes. So obviously we've spoken about the finance clauses and things like that. Get your existing debts in order. If you've got existing debts, what are they? Just getting your slate understand in the right order of knowing what you're spending and where you're spending it. So have a look at your expenses, knowing where you're spending your money on. It's really easy now with a plastic card to go swipe, 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 and actually forget where your money goes. And there's tools about it. At the end of the day, I know people hate the word, but you do need to understand a bit of a budget. And that budget doesn't mean you actually have to have lots and lots of surpluses and watch it to the dollar, but just understand what sectors and sections of where your spending goes. Lenders will look out for in your bank statements if you're doing online gambling, if you go to the casino, if you regularly buy takeaway, if you regularly buy alcohol, all these types of small vices, and we're entitled to live our lives, but they're actually going to look at it and going, well, is it out of control? What's going to happen? I've just really quickly had an example where someone actually, where they work and where they currently live, they live in Burswood. They live in one of the apartments there, but downstairs in the apartment is an ATM, and that's where they take their cash out. But when a lender looks at it, they thought the person was going to the casino every week. So it got questioned.
Yeah, right.
It's just real simple stuff. But just yeah, put it in. Where can you save money? Where can you cut back? And if you have to cut back because you know all of a sudden you're going to have this bigger repayment every month called a mortgage, what changes can you actually make to ensure that you can pay that? The other thing I look at doing is trying to pay a little bit extra. Think about paying weekly and fortnightly instead of monthly. If you get paid weekly and fortnightly, try and break down your repayments so that you actually put them in line with when you get paid and you can get it out of the way. Pay extra. TV, as you know, from a banking background, paying weekly and fortnightly, generally you end up paying an extra month a year in repayments. It puts you a bit of a buffer. So the goal is trying to get 3 to 6 months worth of your loan repayments in advance in your mortgage as quickly as possible. Imagine if you did that 12 to 18 months ago, not knowing that COVID-19 was going to impact this year and your income was impacted or you couldn't work for a number of weeks, but you actually have the security knowing that you've got these extra loan repayments in your mortgage that gives you the buffer to get through the pandemic and get you through any sort of problems. That's something that I would stress to actually look at from that side.
Yep. Mate, I really appreciate what you've done. I've just had a little comment made. There's a lady by the name of Judy. I think I do know her. She sort of made mention budget Tony Viner. Yes, I'm not sure where it's coming from. And I've just had a comment about Betty. She made comment earlier with, when we were talking about having a bank written on the contract. She on her contract, she originally was advised, had it on there as any bank, and she actually got it changed to be a specific bank. So well under her. So hey, listen, we'll definitely have to get you back on board because I've got a heap of stuff here that we want to go through. There's other things that we can do. So been an absolute pleasure having you on board. Just quickly, I know we're getting out of time, but I had a scenario this week, and we talk about first home buyers. We talk about home buyers in general, but there's a product called title insurance, and I'm going to get Sandy on board because this was a classic example, and it's not something that happens all the time, but it does happen. And certainly, we've had a boundary fence that's blown over. The boundary fence was, they then got in to get it sorted, and surveyors had to come in and readjust a few things and suddenly found the boundary fence and the boundaries, the actual legal boundaries, were two entirely different things, like 1.5 metres difference. And we're talking the best part of 30 metres long. That suddenly becomes a nightmare. And unfortunately, that's going to be a cost to someone. And surveyors involved, and there's valuers involved. I'll have to talk to you about that in a minute, OD, after we go off air. But it just highlights the importance of things associated with property, not necessarily every day, every property, but it also highlights we've got to get Sandy on board about title insurance and what title insurance is about, because we all hear that word insurance. We had Justin Collins on recently with insurance, and we had a lot of feedback about that. So we'll try and get Sandy on board because I'll talk to her about that particular topic and a lot like it. So, but it highlights the various things that are associated with property here in WA we need to be aware of. But mate, it's been an absolute pleasure. I've got one quick question. We've got to have an if question. We always have an if question. If you could rejig one of your rooms in your house in this current climate, any way you want, which room would you choose and what would you do? Just quickly.
Well, tonight I've actually been kicked out of my home office for my son for his study. So a second office would be good. But actually, something that I've missed that I actually got to use earlier this year is in my home office, because I do it more and more and more, is one of those ergonomic desks that can actually automatically, electronically up and down raise, but a proper desk. And you just push the button. So I'd love one of those. Thanks for Christmas.
Okay. OD?
Definitely the master bedroom, mate, but not for the sort of reasons that you would be thinking or because of why you do it. But a number of years ago, my wife said that we should invest in like a really good quality mattress, and good quality means spend lots of money. And I was very reluctant to do it, but we ended up spending about $3,000 on this particular mattress, and it was the best $3,000 that I've ever spent. So I don't want to buy another mattress or anything, but I love going to bed now because I just love lying on this thing. And so therefore within the master bedroom, I definitely need a bigger television set. I'm thinking 80 inches or something like that. Just a monster television set to match how much I love lying on that bed. The TV would just would Top it off.
Right, well, I'm going to be, you guys are boring, I reckon, because I'm going to do an extension of the family room. And that extension will then allow me to have a golf simulator in the room with a little section in one side where it'll be the gym. And then when my grandkids and whatever want to go and do their thing, they can go nuts and whatever and have a crack at the golf, and Poppy can show them how to go, how a real games, and I can practice my hole in one. So I want a room that I can extend out and put a golf simulator in there and make it basically because who knows with COVID, I might be able to get out of the golf course, so I'd be able to get out there and practice with a golf simulator, do my exercises in the corner. And Laura just said she'd like a spare room into a gym, so she's with me. Good on you, Laura. And Judy said you're hilarious.
I reckon, yeah, I was just going to say, in the great words of your wife, I bet she said budget, Tony. Budget, Tony.
No, Judy's gone home alone. Hey, listen, we've got to finish. We've done an hour. This is a world record. Dino, it's been an absolute pleasure, mate. Really good value. We've covered lots of topics. OD, thanks, mate. We look forward to seeing you next week. We are hoping to have a chat to someone up north next week. Laura, Betty, Judy, and anybody else that's watching or listening, share what we're doing. We're really trying to get this out and about. It's been lots of fun, and we look forward to seeing you all again next week. Thanks, guys. I'll talk to you shortly, and we will just do a quick little ad. That's end of episode 17. It's been fabulous. Please take care. Stay safe wherever you may be. WA, travel safe. People over east, please stay safe and stay healthy. Thanks for taking the time to watch us. Cheers.